Meltdown is all about how we got into this mess, what the real causes of this mess, this financial and now economic mess that we're in are. And I go back to look at the real causes in the early to mid-1990s. And what they are quite simple. Western capitalism went global. And when it went global, it took jobs abroad, and it put pressure on our own wage levels in the West. So we have very low income in the Western world. If you look at one of the staggering things about this crisis, when you look back, is how low our incomes have been in North America and in Europe. In my view, caused by this global capital, which has gone out in search of low costs in Asia. And so what did our leaders do in the 1990s and followed through into this century? What they did with these low income levels of most people, the way in which they improved those income levels, instead of by productivity and proper innovation, is they improved these income levels by a massive, unbelievable credit boom. And so that with low income levels plus the credit boom, we were still able to consume, causing the economy to grow, but it was false growth. It was based upon a credit boom. And that credit boom now has come to an end and has burst. And so my basic point here is the origin of this crisis is not to do fundamentally with banks and with insurance companies and with finance, although they're to blame partly, but it's fundamentally to do with this policy originated in the 90s and carried on in the 21st century by politicians of having low incomes and low wages in the Western world. They needed to supplement by a credit boom, which they could do because of low inflation coming out of China and Asia. That's how they could do it. In the past, you couldn't engage in a credit boom, even if you wanted to, beyond a certain level. Now, in this problem we've got has been caused by historic low inflation, historic low interest rates coming out of our global capitalist system. So that's, in my view, the origin of this crisis, and we ought to bear that in mind when we think about what the origin is, that it's a political origin taken by a political strategy of globalization, essentially. Well, it's very difficult now. We're now at the position where this credit boom, based on low inflation and low interest rates over the last 20 years, the credit boom has come to an end. The bubble has burst. And once it bursts, what we're seeing in the Western world now and in the global economy is we're seeing something that is very difficult to stop until it reaches the bottom, which is a massive deleveraging crisis. Behind every issue, every problem, every disaster we read about in the headlines, think deleveraging, think de-debting. We're de-debting from one group of people to another, all the way down, till we reach a bottom when we can begin again to start building properly for the future. So in this particular next phase we're entering, in my view, for the next 2 years, we're now entering the real economy pinch, the point when the real economy is affected. And markets are just not working. Markets won't work. I'll give you one example where markets are not working. The banks, for instance, which are supposed to be in the financial market, are no longer lending. They're recapitalizing now. And my view is even after they've recapitalized, they still won't be lending very much. So markets are not going to work, and we mustn't think in getting out of this crisis in exactly the same way we've been thinking in getting into it. So what it needs is a whole raft of thinking based upon how to get the economy moving again without markets, in very much the same way that FDR did it in the 1930s in the United States. And very interesting, we now have a new president, we now have a new dispensation. We can begin to think anew about this. So it does mean, I'm afraid, more social approach, if you want to call it socialism, you can, a more social democratic approach to it, a pump priming, state investment, the state moving in now to take up the slack where the markets have failed to get the economy moving again. And once it starts again, which may be, in my view, a good year or two, you can then go back to market economics, begin thinking in market terms about things. So we're going to have to go through a phase where we have more state, less markets, more social concern, and less private concern. And above all, it's going to be difficult. It's going to be a difficult period.